Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, the 29th of August, 2025. And welcome to the last official summer Friday. There we go. That's if you want to find something special about this day, well, there we go. That's the last Friday of of the summer. So I hope this summer was a good one. Was good for you. But hey, look, we're gonna talk markets, of course. Not that what you did what you did this summer, but no, we're gonna talk markets. We're gonna see what's happening. There are a few important economic data sets that are coming out. So stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, today's Friday. Finally, first of all, we made it to the end of the week. That's one thing. And I don't know if you're happy or not, but honestly, it's the last Friday of the summer, official summer. Look, if you're somewhere in a region where the weather is much warmer, then okay, the summer has probably not ended for you, but yeah, officially summer is coming to an end. We still have 2 days left of summer. And then, yeah, we're going to hit September 1st. Ladies and gentlemen, so yes, I want to welcome you. I hope this summer was good for you. I hope this week was good for you as well, because again, it wasn't, it was interesting. The main focus was on Nvidia, but we'll wrap up the week basically. We'll see what's happening. But yeah. Look, before we jump into any action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, I'm going to do my usual. Good morning in the chat room. Good morning, everyone. There we go. I'm going to be first one. I'm going to be the first one. There we go. Good morning, everyone. Yes, nobody beat me to it. Look, this session is meant for those who want to have, grab a coffee, tea, whatever, glass of water, just kind of chill, get yourself running, get yourself going into the markets, basically. So it's that kind of a session, and this is what I'm trying to do. I'm trying to keep it chilled, relaxed, and kind of give you some information here and there in order to prepare yourselves for the market ahead, the day ahead. Look, also, I really strongly encourage you to, if you are joining the live session, ask questions. Honestly, if you have anything you want me to look into something, just drop me in a message in the box in there, in the live chat, and yeah, we'll go from there. If you're watching this as a recorded session, that's absolutely fine as well. You can always leave a comment, and I will then pick up on your question on your instrument, maybe in the next video. So. Right. Also, before we jump any further, very quickly on the Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Look, yeah, this has passed already, but I just wanted to show you that, look, yesterday we had a really good session. It was really fun. We were testing out MACD and just to see how it's working and, if we can apply it in our day-to-day trading activities. And, well, it kind of worked out nicely. So yeah, so for now, long story short, yes, we are going to be releasing more of these type of videos. There's going to be a series of different in videos, different webinars related to a specific indicator, and we'll be doing, we'll be testing it out, when the U.S. market opens up straight away, so you have increased volatility, and basically we could see if it's working or not. Anyway, right, ladies and gentlemen, let's have a look at what's happening here. And of course, as always, the first one is Nikkei 225. But you know what? Let's have a look at the economic calendar, actually. So first of all, very quickly, while we are on this day, Friday today, so today, this morning, We got the construction orders here from oh, Japan. No, you know what? No, I need to start from earlier. So Japan released its a bunch of data. A big drop of data here from Japan. So Tokyo Core. Why is it not updated? Honestly, like, come on, TradingView update. There we go. There are the numbers now. So Tokyo Core CPI year on year came out at 2.5, exactly as expected, 2.5. So we'll see the reaction. But again, the first thing that we're seeing here is a little bit of a decline actually. So maybe this is not reacting to the inflation figure. Let's have a look what's happening here. Unemployment, very good, 2.3. Wow, that's good. Industrial production, preliminary numbers. Now, maybe that's where the problem is. So, retail sales, yes, these are not good. So, basically, these are the numbers most likely the Japanese Nikkei 225 is reacting to. Like I said, Tokyo Core and headline CPIs, okay, on the lower side in a way could be seen as a positive. Unemployment also isn't. So the labor market and the inflation side is okay, but the production side now, and retail sales, now that's something that I think that Nikkei is not loving. Right. Okay. Okay. I get it. The industrial production. These are the preliminary numbers. Nevertheless, it is a little bit of a blow here. So, looking at this year-on-year preliminary number, previous 4.4, expected minus 0.9. That's a steep decline. So yeah, let's see how the market will deal with that today. But to be honest, I think we already got the reaction in Nikkei here, and I think that now is going to be subject to what's going to happen in Europe and the US, and we'll see the cash index here trading accordingly. Going further today, what we got here from Australia, how private sector credit, and nothing major here. Construction orders, there were construction orders year on year. Boom! Look at this. Plus 22.5, minus 19. No wonder Nikkei has reacted negatively to this. What else? Consumer confidence. Okay, this one still is okay. Housing starts. Slight improvement, but not where we would like them to be. Right, going further today, we have German numbers that are coming out today. So we have the German retail sales, which already came out. Those are a big disappointment. There we go. You know what? I'll jump into the German index, but what I'm seeing is that the cash index is not loving the action already. I can see that we're hovering around the 24,000, but I'll get to that in a bit. Anyway, we'll go very quickly through the economic calendar just to have a little recap, and then we'll jump into indices and commodities and Forex and cryptos. So unemployment rate is expected to come out at 6.3. Let's see if that's not going to be a bummer here. If it comes out at 6.4, that's already a problem. Then we have inflation numbers. So yes, Bavaria CPI. So basically, German CPI numbers are coming out. So keep your eyes on that one. ECB consumer inflation expectations, also something to watch out for. Let me just double check. What's the CPI right now? Inflation rate is at 2%. So official Euro area inflation rate is around 2%. On the headline, I'm talking about the headline CPI year on year. This is the ECB consumer inflation expectations, and okay, we'll see what number we'll get from there. Like I said, German inflation numbers, preliminary numbers are coming out. So yes, we're going to get the different Bundeses, Bundesrepublik numbers here. And we'll get the overall German inflation, the preliminary number. So at the moment we're expecting a little bit of a tick up. Of course, the main story today will be Canada's GDP and US PCE figures. So watch out for those. Those are coming out. Check out the economic calendar when those are coming out in your time. Yep, it's 12:30 GMT time. So yep, check it out, because that's when, prepare yourself that that's where when we could see a little bit of volatility, ladies and gentlemen. So yes, how why not to finish the why not to finish the week, the summer, with some nice volatility where we could see maybe one-way traffic. Again, it was a busy week, well, a relatively busy week. Probably the main focus was Nvidia, yeah, it's still let's have a look at what's happening with the PCs. Now look, 2.6, that's what we're expecting right now. So something tells me that maybe this could actually pop a little bit to the upside here. So the PCE, the one that includes energy and food, this one, okay, this one could remain a little bit maybe around here, around 2.6. Maybe I'm gonna give a little forecast here, 2.6, 2.7. But the core year on year. Now this one, because it excludes food and energy. Now this one, if it somehow travels, I think it's going to come out at 3%. Again, look, I'm gonna, I'm gonna make a call here. If I'm gonna be wrong, I'm wrong. Well, look, we're gambling here. I think it's going to come out maybe somewhere around 3%. So let's see if that's going to be the case. It's going to be quite interesting to see if it does. Then, well, this. Let me refresh the page here. This, that we're hoping for a September rate cut. Now look, the rate cut will happen. It's just that the percentage here, the probability could drop a little bit if the PC comes out on the higher side. So again, keep that in mind. Is it going to change the course of the the cut here, that we're not going to see a cut? No, we will see a cut. I think, as I already discussed this previously, I think that we are right now in a position where the Fed will just say, you know what, honestly, have your cut. If the economy will screw up, it's on you. Here you go, have your cut. Because Jerome Powell is leaving next year in February, if I'm not mistaken, end of February. So in a way, the guy, I think, he had enough. Everything became very political, and it seems like it's no longer economics that matter. It's more of a personal ambitions of a president. So yeah. So look, at this point, I think that what they're going to do, they're just going to say, even if inflation comes out on the higher side, on a much higher side, they will still say, you know what, have your cut. Let's see inflation, popping higher, because in my opinion, and I agree with some analysts who started to talk about this already even more, that we could be entering the kind of the area, not area, but the situation when we could have stagflation. So we could have higher inflation, lower growth, and higher unemployment. So if that's the case, next week, next week we're gonna get the NFPs, the U.S. job numbers. So this is what we will be carefully monitoring, of course. So yeah, like I said, keep your eyes on this, but very quickly on what's happening this week. We had in the beginning of the week in Europe, we had the IFO business climate in Germany, which showed some decent numbers. We had some building permits and new home sales in the U.S. Those were a little bit of a bummer. New home sales, yes, not very good. Building permits month on month here, yeah, declined, so not very good. The housing market is not feeling very well. RBA meeting minutes came out on Tuesday, nothing major. They just kind of confirmed what the bank was talking about previously. Durable goods in the U.S., okay, those were a little bit of a better number here. We can see the month on month figure, but still in negative zone. Going further, new house price index, that's what came out. So the house price index, the year-on-year figure came out at 2.6, so lower. Basically everything was falling in the housing market. Consumer confidence was on the lower side, better than the forecast, but worse than the previous. Going further into Wednesday, look, a few pieces of information here and there. Again, with Germany, consumer confidence came out. The business climate came out on Monday. Wednesday, we got the consumer confidence, and well, that wasn't, the consumer is not feeling very well. Let's put it this way. Then we went into further. We got some oil numbers, nothing major. Going into Thursday, then yesterday we saw consumer confidence coming out from the EU, and that one was a disappointment. Basically came out as forecasted, but was a little bit of a disappointment, to be honest, still overall. And then yes, we got the GDP growth rate from the US, the estimate, the preliminary one, and that one showed kind of good results here, as you can see. So the Q on Q, the second Q on Q came out 3.3. Oh, wow, that's a high number, let's say. And pending home sales were a bit of an improvement here as well. So okay. So yeah, overall, like I said, the job numbers, the U.S. numbers were kind of mixed, I would say. Europe was the one that everybody was watching, and of course, everybody was watching Nvidia. Nvidia showed somewhat good results, but what's interesting was that good results excluding China, and this is the topic now, number one, that the China sales were not included. And for me, it looks like when you're trying to make your numbers look good, you don't want to damage investor morale, and that's why you didn't include China. I think that of course that was done deliberately, that in order, like I said, not to look bad. Because with China it was unclear, there were numbers here, there, then there were some, basically we understand that Nvidia went through political issues. So kind of a victim of circumstances. So, we saw this, a price action accordingly. So look, the previous all-time high was at, actually not previous, it failed oh my god, it became very close to hitting the new all-time high, is that correct? 184.47, and here 184.48, just by 1 cent it did not reach the current all-time high. Interesting, very, very interesting. So yeah, and then it kind of retraced back down. So look, I think the market is now talking about the idea now is it like, is Nvidia done, or is this the end? Look, I'll say it this way: does the company still have product? Yes. Is there still demand for its products? Yes. Even if China suddenly comes back and says, you know what, let's buy it again, I think that this is the company will continue showing good results until this whole AI boom is happening, until we need to power a lot of electronics, a lot of data centers, and until the chips are needed. Now, of course, we know the story that that Nvidia is not allowed to sell its top chip, the Blackwell, I think it's called, and it was kind of the whole news that it was making the so-called H20 chip specifically designed for China. Now, because initially, and even before that, the story goes that the US decided to say that, oh, we know it's a threat to national security if China will get the top chips from Nvidia, and of course Nvidia wants to sell those, but then the U.S. government said, oh, it's not a matter of national security. But then when the U.S. got the 15% revenue share from all the Chinese sales, that's kind of fine, right? That's okay. Suddenly there's no national security. Yes, they decided, we'll make a different chip, like a much better one than Well, not a much better one, but they specifically designed for China. Well, Chinese were initially okay with that, but then probably did their research and they said that, you know what, no, it seems like we feel like we are second class citizens here. So no, they pulled out pulled out from that H20 chip, buying that H20 chip, yep, it kind of damaged. I think that it kind of damaged the whole kind of Nvidia plan to to go and deliver even more spectacular numbers. So, long story short, for now, I think that I don't know what's going to be the outcome with all the Nvidia chips being sold to China. We understand recently from what I saw that Jensen Huang is trying to advocate and trying to push the U.S. government to open up the kind of the gateway for Blackwell chip the top chip to be sold to China, and at the moment it's this game. So again, we'll see how it's going to play out, because again, this time the US should be more interested, because they have 15% of all the sales, from all the revenue, not even profit, from the revenue, from all the revenue from the sales of the Chinese cells. Maybe this time they're going to be a little bit more open to selling the top Nvidia chip to China. Anyway, so yeah, coming back to speaking of China, looking at this picture, a beautiful picture. There we go. The technical picture here shows that the 14,588 remains above this. We remained above this hurdle, and above this 14,588, and yep, there we go. The push happened. The 15,400, 600. It seems like that's the target we're currently aiming for. But first, we need to overcome this psychological 15,000 zone on the China A50 index. Let's see if that's going to happen. At the moment, it's a very interesting moment. So far, so good. Everything's working out here. If we somehow drop below the 14,588, I'm leaning towards the downside, towards a test of the 50-day EMA. Let's jump into the US indices. So, of course, we're watching the data. Yesterday, we had a good run. Look at this. Okay, this looks a little bit bearish. However, I do not want to rush into things. Look, maybe this could be seen as a bearish 3 method. Monday was a big decline. Then we have the 3 consecutive candles to the upside, where the bodies of those consecutive candles are within the first body. So the second, third, and fourth candle. So that means the 5th candle could be to the downside. Again, I'm not going to rush. I will say I will go for some higher levels if we do push above the 45,760 zone here. If we do that, then yes, great. I'm going to lean for the upside. If not, I'm kind of considering maybe a little bit of a retracement back down here. The S&P 500, we went for a new all-time high yesterday, and today, looking at the cash index, we're seeing a little bit of a retracement, but look, that's fine. As long as we stay above the above this hurdle here, the 6,486, I will continue targeting the upside, and then we'll just kind of take it from there. NASDAQ 100 looking good here. The 23,705 zone is the one that I am watching carefully here. Look, we found good resistance here. I think if we clear it, then yes, we could go a little bit to the upside. We could go for that all-time high. But if we struggle in overcoming this hurdle, then well, we could brace ourselves for a bit of a retracement back down. Either way, still I would get a little bit more comfortable with the downside if we do break this upside line. Dollar index very quickly drifting lower here. Actually, you know what? This upside line no longer needed, and I think that yeah, we need to get rid of it. So what I'm going to do here is I'm going to keep an eye on the this little hurdle, this 97.42. If that gets cleared, a forthcoming lower low will be confirmed. If we can get that move, amazing. More sellers here could join in. A push above this downside line right here could attract more buyers into the game, because at the same time it would clear the 50-day EMA. let's jump into Germany. So yeah, this is where we're at right now on the German cash index. Now look, after we found fantastic resistance near this downside line taken from the high of the 10th of July, we drifted lower, and most importantly, we fell below this hurdle. I talked about this in the beginning of the week. I said that keep your eyes on that 24,200 zone, because if we break below it, then there is a good chance for this one to actually end up traveling towards the 50-day EMA, or maybe even the 23,922 zone right there. Good, fantastic hold up right now. Look at this. The 23,922 acted as a great area of support. We did test that this morning. Look at this, beautiful, boom, and now we're seeing a reversal back to the upside. Let's see if this is going to hold, ladies and gentlemen. Let's see if this is going to hold, and if we're going to hold above, somewhere above this territory, above that. In general, basically, if we can travel back above the 24,000 zone and stay above it, I'm going to consider a little bit of a move to the upside. So yes, and then we'll just kind of take it from there. But for now, yes, be careful, be cautious, and certainly keep your eyes on that 23,922. If we clear it, a forthcoming lower low will be confirmed. Let's jump into the FTSE 100. By the way, actually, while we're going there, let's have a look at France very quickly. Because, again, France has experienced a little bit of a turmoil. There are political issues in the country with the prime minister, and not the president, Macron, but the prime minister. So, yeah, there's like no confidence vote and stuff like that. And, yeah. Anyway, it's as always French politics. But the FTSE 100, breaking the upside line. Now, don't get me wrong, this upside line is a little bit on the tentative side. Nevertheless, we are currently breaking it. So the question here from now for me is that if we can sustain this break, if we can stay below this upside line, then yes, ladies and gentlemen, I am leaning towards the downside. Basically, that's going to be my game plan right there. Let's jump into the Forex world. AUDUSD. So yeah, this one, there we go. We're testing this downside line. I talked about it, and this downside line is taken from the high of the 24th of July. Am I getting bullish? No, not quite, because I'm actually going to consider maybe a bit of a retracement back down here at some point. Look, if we somehow drop and stay below this downside line, then we'll get ourselves a nice little false breakout here through this downside line, and we could see a drift back down. This could confirm this. Look, it wouldn't confirm yet, but what I'm watching here is the descending triangle pattern. So if that's the case, then according to all the TA rules, such patterns tend to break to the downside, but a confirmation break below the 0.6418 is needed. So all this area right here could be just random walk. So yeah, but at the moment, given the fact that we're testing the downside line, we're kind of breaking it. So let's see if we can stay above it. Again, coming back to the US dollar, this one, like I said, it's unclear. We need to wait for the PCE for this one to actually make a move through one of these lines here, and that's why I have the. That's why I have these lines here, and I'm waiting for, like I said, the PT, and at this point, while we're here, it's unclear. So the same story is with, like I said, with the AUDUSD, which kind of is a little bit unclear. Yes, it wants to go higher, but can it go higher? Let's wait and see. AUDNZD is at an interesting spot here as well. We cleared the upper side of this rising channel, and then now we're testing it from above. And if somehow we fall back inside this rising channel, I'm going to consider a move lower. For the upside, to be honest, I'm taking a very conservative approach. I'm waiting for a push above the current highest point of this week, near the 1.1122. This way, I will start aiming for levels around here. I think this is a good area of resistance, 1.1173, 78. So yes, we could then consider some higher levels. I mean, this could be a good target, but only if we clear the current highest point of this week. AUDJPY, we're approaching this downside line. Now that's great in a way. Let me just double check something if this is actually gonna make any sense. Because initially I wanted to draw this as a nice little kind of falling channel, but I'll show you that this falling channel is way too much subjective, you know. So, okay, I mean, we can keep this on the chart, but it's not really, let's say, picture perfect here. So yeah, look, I mean, if what I'm looking at here is, I would like to see a push above this upper side of the falling. Even if we take it as a falling channel, I want to see a push above this trend line. Let's put it this way, this trend line. Then I will get a little bit more comfortable with the upside. At the moment, we're approaching, let's say, a key area of resistance. We need to see if we can break that or not. Very quickly on NZD, nice rebound from the 0.5797 zone. So we're pushing back up. I think it's going to end up testing these EMAs, maybe even this downside line. Let's see. USDJPY. This one, it seems like it's waiting for the PCE number. So, of course, keep your eyes on that one. At the moment, this looks a little bit more bearish than bullish in the short run, by the way, because look, one thing I want to point out, this I'm going to keep this here, but it seems like we are currently in a range, and we're trying to wait until we get some sort of a clarity here, some sort of clearance. Let me just brighten up the day here a little bit. There we go. So this is what I am looking at. So this little range here, this little box where we are currently in, we're struggling to get out of it. So we need a good catalyst, and the good catalyst could be the PC. Now, good in terms of to whom good? To the USD bulls or the Japanese yen bulls? Well, at the moment we don't know. But if we apply technical analysis, we look at the prevailing trend. The prevailing trend was to the downside before entering this box, this range. Then the greater chance for this one is to break out lower. However, that doesn't always happen. So we always, what? Exactly. We wait for the breakout. So in general, like I said, yes, this looks a little bit more bearish than bullish. But my bearishness could come only to test this upside line taken from the low, the 22nd of April. USDCAD very quickly. So we're watching this one as well. Beautiful move initially above this 200-day EMA. That was last week. But then on Friday, we quickly drifted back down, fell back near the 100-day EMA, and now we're falling below the 50-day EMA. So in a way, everything is pointing a little bit more towards the downside. As long as we stay below all my EMAs here, especially below the 50-day EMA, then yeah, I'll continue targeting the downside. USDCHF, we are, well, with USDCHF, we are kind of stuck here a little bit. But to be honest, it's the usual. It's the kind of copy of a DXY, almost copy of a DXY. So yeah, we're waiting for that. As I said to you, I'm waiting for a catalyst to force this one out of the shell here. The same I'm doing with USDCHF right there. EURUSD. So, beautiful flirting moment yesterday with this hurdle near the 1.16 zone, and we did have a little false breakout, but then look at this, we rebounded and pushed back up. So I would say this way, I'm going to get rid of this arrow, and what I'm going to do, I'm going to wait for my clearance. Either I need to see a break of this downside line taken from the high of the 1st of July, or I need to see a drop below the 1.16 zone. That's kind of it. So, and while we remain here, I'm just observing the price action. Let's jump into GBPUSD very quickly. So, a similar story, but look, I talked about this idea of an inverted head and shoulders pattern with the left shoulder being here, right? Maybe we're forming a complex inverted head and shoulder. I don't know, but again, there is a chance for this one to pop higher. And in general, look, if it wants to pop higher, today's the day. Today's the day, but for that we need to see a lower PCE number. That means that the US dollar then could weaken, and we could see this one here pushing nicely to the upside. But again, whenever something is very straightforward, or at least it seems like very straightforward, then it doesn't happen. Look, for now, I'll say it this way: I will get rid of this. I will get rid of this arrow, and while we remain here, I'm not going to touch it, because on one hand we have something of a bearish indication here. The pattern here, to move to the downside, three candles, the bearish three method. So the three candles, the bodies of those three candles, the positive ones are within the body of the first candle. So the fifth candle here should be in a way theoretically to the downside. But if we take the previous candle here, the last Friday's candle, then maybe this is a flag, or maybe it could be a bullish flag. So maybe we could pop higher. So either way, honestly, it's just at the moment it's a bit of a tricky one. So for short term, maybe we could keep an eye on this 1.3515. If we clear the 1.3515, then yes, I'm gonna go to the upside a little bit. Jumping into let's jump into commodities. Gold had a very good move here. Look, at a few points this week, we thought that maybe, maybe it's not going to go travel higher, because those retracements were quite big-ish, I would say. But hey, we broke the downside line here. We did retrace. We retested the broken trend line. That, by the way, this is one of the rules that I follow, that whenever we break a trend line, we tend to revisit it from the other side. And exactly what happened on Wednesday after Tuesday's break here. So yesterday we rallied strongly, and we basically are approaching now this area, this key area of resistance of mine near the 3,430.50 zone. So I think it's a good target. Right now we're seeing a little bit of retracement. That's fine, but certainly, yes, watch out for this, because again, and also what you can watch out for, by the way, is maybe, just maybe, we could see like a very sharp decline first, and then let's say the PC comes out and it's on the lower side, the dollar devaluates, and we see gold, boom, pushing beautifully to the upside. But again, like I said, this is my target, this is my area of resistance. If I jump into a weekly chart, you'll see that so far it has been a very good area of resistance, and I'm talking about this highlighted territory. Let me just increase the brightness here. 20. So yeah, this is the area that I'm watching, and hey, I like it very much. Again, if you're not in this trade on the breakout, I would say just right now maybe be careful, because again, we don't know what's going to happen with the PC. But in general, for me right now, what I'm looking at here is I'm seeing a little bit of a retracement. That's absolutely fine. Let's see if we can rebound nicely here and push towards that 3,430. I think that we could end up testing the 3,400 at least today. I think that retracement here could happen. So let's see how this is gonna go next. But certainly, I'm still somewhat positive on gold, but I'm aiming for this highlighted zone first. Silver is looking positive as well so far, so good. So yay, why not to aim for the upper side of this rising channel, and then we'll kind of go from there. For the downside, what I would like to see here is a drop below the 38.72, and if we can get that move, amazing. More sellers could join in. Palladium is trying to climb back up, and so far it seems to be succeeding in doing that. But to get a little bit more comfortable, I think for me at this point, what I would like to see here is a push above the 50-day EMA. If we can get that move, wonderful, more buyers could join in. Platinum is stuck in this formation, and this formation looks like a rising wedge pattern. So according to all the TA rules, such patterns tend to break to the downside. However, a confirmation breakthrough the lower side is still needed. Because why? Because we don't know, because it could still move kind of sideways, but tilted to the upside a little bit, while it remains basically in this pattern. And then yeah, we wait for clearance through one of the sides, and then we can do something about it. Copper is looking good here. We had a rebound, pushed back up, and we climbed above the 4.54 territory right here. Now look, I'm considering this move towards the 23.6, and this current breakout here is kind of supporting this idea of a move towards that 23.6 near the 200-day EMA. I think it's a good target. Let's see if, as long as we stay above the 4.56, then yes, I'm going to aim for that 23.6 here on my Fibonacci retracement, which is drawn from the highest point of July to the current lowest point of from the highest point of July to the lowest point of July. Oil, my beloved oil, look at this. We're flirting with that area again, the breakout area, the 64-65 zone. And we're currently struggling to push above the $65 mark. If we push above the $65 mark, I'm currently abandoning the downside scenario. But if we struggle with pushing above the $65 mark, then there's a chance of this one actually drifting back down and maybe ending up testing the 62.93 territory, and a break of which could attract more bears into the game. And then we'll go for, of course, for the current lowest point of August, which is near the 61.43, and then we'll go from there. Natural gas, very quickly, there we go. Look at this, traveling back to the psychological 3 level, and most importantly, we broke this downside line. So now let's see if we can clear the psychological 3 level. If we can, well, ladies and gentlemen, I'm going to be leaning a little bit more towards the upside. Coffee, my beloved coffee, there we go. Look at this, false breakout through this downside line. And I think now it's time for a little bit of a retracement back down. So this is what I was hoping for. I was really hoping to see this. And now let's see if we can get that retracement. So as long as we continue to trade below this downside line, I'm leaning towards a bit of a retracement. I'm not saying that I'm bearish, no, but I'm leaning for a little bit of a retracement back down. Maybe, first of all, of course, towards that 23.6. And then maybe actually I need to lower down my appetite a little bit. 38.2, I think that sounds a little bit more reasonable. 50% looks good as well, but let's not get way too greedy. We'll examine that one if we do see a drop, below the 38.2. Now, cocoa, looking at this, cocoa is yes, sitting above this area here of support, and this area of support is roughly between the 7,636 and 65 levels. Look, we tried to break it, and we did a few times, but we're struggling to stay below it. So it just proves to me that it's a good area of support. If we eventually stay below it, then yes, I'm going to go lower. Wheat has stalled, but most importantly pushed back above the psychological 500 level, and that happened last week. So great, wonderful. For now, what? For now we want to just for now we just want to probably wait and see what's gonna. If we can clear this 100-day EMA, wherever it's going to be, then yes, I'm going to go a little bit to the upside. Sugar. Sugar is an interesting one here as well, and sugar, look, I talked a lot about sugar, and let me just tidy up the chart. We are struggling to break below this upside line, which I talked about a lot of times already, but at the same time, we're struggling to push back above the 50-day EMA, shown as the green line. So which ones will it be? So come on, sugar, which one will it be? So at the moment, I would say this way: if we do somehow pop back above the 50-day EMA, I'm going to lean a little bit more towards the upside here, towards the 100-day EMA. But if we clear this upside line, well, it could open the door to some lower levels. Let's jump into cotton very quickly just to check what's happening. We're pushing back up, at least trying to make our way back to the 200-day EMA. But for that, we need to see a strong move back above the 50 and the 100. Yep. Ladies and gentlemen, for dessert, Bitcoin. Now this one is a roller coaster ride. Look, at one point we were climbing back over the 112 zone. I was thinking, are we really gonna go back up? But you know what? At this point, for the upside, I think I will redo a few of my levels, and I will say that for the upside right now, I would need to see a push back up with the 117 zone. Yep, that's what I'm gonna do. I will keep an eye on the 50-day EMA. I will start looking at the upside from here, but certainly this could be just a better confirmation for the upside. But at the moment, look, what I said to you before in the beginning of this week, last week, I said that if we are going to drop below the 112 zone, that kind of is opening the door to some lower levels. But then if we are going to drop and stay below the 100-day EMA, that is also opening the door towards a possible move towards the 200-day EMA, and that's not far from the psychological 100 level. If I would, I mean, I'm not against Bitcoin, but I think at these levels, I think yeah, it would be better to buy Bitcoin maybe a little bit lower, you know. And hey, the 100,000 looks very attractive. So I think that you would gain a lot of investor attention, you know, at around 100,000 zone. Bitcoin Cash, yes, drifting lower, and we broke the lower side of the rising channel again. And well, it seems that we want to go a little bit lower, but hey, this is the hurdle that I'm watching, 540 zone, where if we stay below it, my next target is the 100-day EMA. Ethereum is also drifting back down, but I have this upside line. This is going to be my target, and then we'll go from there. So this is going to be my upside line drawn from the low of the 22nd of June. So this is going to be the one that I'm going to be aiming for, and then we'll see if we can rebound from it or not. Ripple. Ripple is dropping back below the psychological 3 level. It's basically like natural gas here, you know. It is really loving that 3 level. So yeah, we're dropping back below it. We fell back below the 50-day EMA. So let's see if we can actually eventually test the 100-day EMA here, shown as the blue line. Litecoin, similar story. Yep, dropping back below the 50-day EMA. Again, I'm targeting the downside here. Initially the 100-day EMA, and then the 200-day EMA. Dogecoin is, look, I'll say it this way: if we do fall below all the EMAs here, then yes, great, more sellers here could join in. For the upside, I would prefer to wait for a break of this downside line. If we can get that break, wonderful, more buyers could join in. Polkadot is at a very interesting spot here as well. And yep, I would say this way for now. I'm leaning towards the downside, but again, as I previously mentioned, I need to see a clearance. I need to see this one getting out of the triangle pattern. So I need to see this one breaking one of the sides of the triangle. If we can get that move, okay, then I'll consider the next short-term directional move. But for now, it's yeah, it's a little bit on the tricky side. While we remain in here, I'm not really touching it. And finally, Tron, one of my favorite ones right now. And yes, look at this beautiful. I removed the upside line previously. If you remember, I had the upside line, but now, I mean, look, I started looking at these hurdles, the 0.3440 zone here. We're dropping below it again. I think it's opening the door to the possible test of the 50-day EMA. So let's see if we can end up traveling there. Ladies and gentlemen, that is a wrap. That is a wrap for the last trading day of the week, of the month, and of official summer. Ladies and gentlemen, I hope you know you had a great period, you know, great summer period. I hope you had a great month, and I hope you had a great week as well. Look, be careful today. Watch the PCEs numbers. That's when the volatility will come in, and that's what the market is actually hoping to see and wanting to see, because that's the favored Fed's inflation metric, which yeah, will determine, you know, could have its part in the determination of further rate cuts. And at the moment, of course, we're expecting a rate cut in September, but look, it's going to be interesting to see how this percentage will change, you know, getting closer to the date. Maybe I'm thinking that it could actually drift lower. Let's see. But yeah, keep your eyes on the PC today. Although, you know, I was saying that I'm leaning a little bit more towards the upside on the PCs, but hey, Maybe on the contrary, maybe it'll come out better, and basically everybody will say that, oh yes, the Fed is doing the correct decision by going for those rate cuts in the end of September, in the second half of September. So anyway, long story short, ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. Join me on Monday, as always, 6 o'clock GMT time. But for now, have a beautiful trading day. Stay safe, have your stop losses, and place risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you on Monday. Bye-bye.